New business funding options in 2023 to take advantage of, ones you may have not have thought about, certain business loans you may be overlooking, or ways of saying, hey, what if I got this and applied it this way to get me Z result? And how to get up to $26,000 per employee in a refundable payroll tax credit, as well as much more. Hi, this is Michael with Viral Funding Solutions. I'm an expert business loan broker who's been able to help a lot of businesses get the right type of financing. You may be asking, what is a business loan broker? So very quickly, I'm someone that can connect you with the right lender or lenders, the right underwriters, the right organization. So you have a specific need for funding. There's certain problems, obstacles, roadblocks, you have challenges, and you want to get to certain results. You want to cross that bridge to get there. And I can help the majority of business owners get the right type of financing. But it's not just as simple as going, applying and anywhere and anywhere and seeing where the ball drops and saying, well, that's what I'll look at. It's not that easy and straightforward. A lot of business owners do it without even knowing that it can do more harm than good. It can rack up a lot of inquiries, whether it's just soft or even hard pulls. And that can limit you to other types of financing where we can become more restricted. So without going any further on that part, as well as the introduction, and I can handle documents as a broker, and what I can see, I can pre-underwrite a file, and I know what an underwriter is looking at, and the best ones out there, by the way. So without going any further into that, I have a treat for you guys today. I was on here earlier, in case you're watching now and you saw that. I had a few things come up. I had a lender, I had something that I was notified about. I really needed to jump on top of it and send them a quick response back via email, and I couldn't do it here via live. I had to do it really quickly. So now that I'm back, I want to start off with some things that you guys may not be looking at. And these three things are credit, cash flow, collateral. And before I go into the credit, which is where I want to begin, just understand that I'll also bring up towards the end of this video, looking at it from my perspective. I very much so enjoy helping people. I look at it from your point of view, but at the same time, I want to make sure that you are also putting yourself in my shoes and you get to see what I do and go through day to day, a lot of the good and things that are, it's a head turner. And so let me start off with credit-based financing. So one way you can get creative, and this is what we would like to call creative financing, is using credit-based. So your credit score, your Experian credit score, FICO, and what ideally we're going to go look at are unsecured term loan options. So unsecured financing, that can be in the form of a personal loan, or it's also called an installment loan or a term loan. And this one can vary somewhere between 20 to 300, if not 20 to 500,000. Usually it's from 25 to 300,000 you see in this space that we can approve you for. But this is essentially where we're looking at least a 680 Experian credit score. We could do a soft pull with Experian. It doesn't hurt your credit. And what we're looking at is to make sure you have your debt to income ratio correct, making sure that you have enough payment history, making sure that you have everything where it needs to look squeaky clean. Myself and my team will look at these things. And so we can do an initial soft pull before we go any further and try to get you an offer. And then by then we communicate with you and we'll tell you that, hey, it's a hard offer at that stage. So we might have to do a hard pull, which is fine. It happens with those certain products. It's okay. If the benefit exceeds your repayment and you have a use for these funds, if you're going to double, triple, quadruple your money, but a lot of the times also the reason why you take those is for working capital. You want to have longer terms. That way you can hold money longer. And if you need it for surviving and thriving reasons, you can use that as well for payroll, for these certain things. So now what I want to jump into, because I wrote a little bit of it down here, I'm not really looking at it too much. I have a big notepad in front of me where I was doing notes from yesterday as well. But when you're getting a personal loan in the form of an installment or installment loans, term loans, somewhat as what they're known as, then you can realistically get in with the 680 on Experian. We can look at that. It's less heavier there than it is to say, let's get you a personal line of credit. So personal loans, term loans, installment loans with the line of credit. Can we do the two, one or the other, or can we do any at all? And with the personal line of credit, they'll likely see at least a 680 on all three consumer credit bureaus is what they really want to see. They want that ideally. Sometimes we have certain lenders where they're more flexible, and you wouldn't know that unless you work with someone like myself. Yes, you may be able to find stuff like that, but the relationship you have and the flexibility and the access that I have to those lenders and those underwriters, like they know me, they work differently when they see that stuff. And there's more communication, there's better benefits and much more. So what I say is you want to have at least a 680 on all 3 consumer credit bureaus for a line of credit. But that's not even a guarantee, because with the line of credit, unlike the term loans, you have to have excellent credit history. Yes, but I have a 750 on all 3 consumer credit bureaus, Michael, or more or less. Yeah, but you have timeshare. You had an issue with that. You have derogatories. You have late payments in the last 30 months, in the last 60 days. How many inquiries? Okay, you're over 4 per bureau, or you're over 4 on one and you have 3 on the other ones you've gone over, and it's been over the last 6 months. So ideally, with those lines of credits, when they look at it even deeper, and if the reasoning you're using a personal loan for business is as a startup, pre-revenue, yes, we can look at a personal loan. We can try to approve you for that. It could be much more difficult to get a personal line of credit, especially in this industry. But at least as you get a personal loan, the difference is this right here. You can use this as you choose. You get 1 to 5 years. You even get to choose between 3, 5, and 7 year terms. What would that do for your business? And we are streaming right now on YouTube, and I did this spontaneously, so it's okay if you're not watching at this time, but later on the replay. And also give me a hashtag live or hashtag replay. Let me know the time interval. Give me a wave. Let me know where you are tuning in from. I won't take any more of your time. I'm going to try to end this in less than 15 minutes, and I'm going to get to the whiteboard in a moment. I know you see that on the screen. And so I'm going to show you the ladder on how you should develop and what you should go into. But the credit base, we just talked about that a little bit. What we didn't get into are the personal credit cards or business credit cards, and or which ones. And those ideally, we want to have a 700 and above on all 3 consumer credit bureaus to get you these 0% interest for 6 to 18 months credit cards. And we could do a credit card stacking where we can add multiple credit cards from different banks, from different institutions, and we'll find you. We know which ones work. We've seen, okay, this one pulls from TransUnion, this one pulls from Equifax, this one will look at Experian and TransUnion. So what is in your best interest? Which one has stronger credit history? And what are you reporting? And when was it reporting? So when we look at these things with myself and my team, we then can say, we can get you, let's say, a $10,000 card here. We'll pull the trigger on that one, and then we'll get you this one here for $20,000. Now you have $30,000. And guess what? We're not even talking about the personal loans you can use for business. So when you get a term loan on the personal side that you can use for anything realistically for your business, when you go to the right personal loan lender, they'll say, hey, we could approve you for $75K. And then we got you about $30,000 in credit card. Now it's on the business and it's on the personal side. All right, so $100,000. And how much did you need? You needed $75K. Even if we didn't get you all you wanted, you're getting something is better than nothing. And so I can go even deeper into the credit-based financing, but look down below in the description. I'll leave more information. And if you're watching here on the live, it's not there right now, but on the replay, I'll have in the description. You can check out more of the credit-based program and what I recommend, as well as the questionnaire form down below. I'll let you submit, where I can give you a highly personalized and customized email response back on your best funding option and options, thoroughly broken down like nobody else's business. I'll show you all your options, whether you can or can't qualify. Excuse me. And if you have done it, I will get back to you. I do ahead of time apologize because I do get quite flooded. So please bear with me. I'm not one to sell people. That's not my personality. I've even had people come up to me and go, hey, Michael, why are you even in this space? Your character, your personality doesn't even match that. You're a systems and math guy. You're the guy who works behind the scenes, which is true. But there are times, and I have my other businesses that I run, just in case you didn't know, I have other businesses that I'm running. So I look at it from your lens. I look at profitability. I look at net operating income. I look at everything. And so here's where I want to now segment into, and then I'll get into the whiteboard and kind of go over and we'll close up shop, try to do it underneath 15 minutes if possible. So looking at it from my point of view, some people will hear this part and go, Michael, you're trying to make it about you. No, I'm not. But if you're missing the point on why I'm bringing this up, well, I can remember just as far back, being in a 9-to-5, if you know, whether you've been overpaid, underpaid, just enough, you don't want that. You want more freedom. You wanted to do more things. And that's where I came from. I went to school, university, college, and I went to university and the community as well. And I did more. I played Division I soccer. But the thing is, then I had gone into work again, and I was trying to go up different levels, and I just wasn't able to grow. And I wasn't able to grow at that rate. I had a little increase move here, but it just wasn't going anywhere. And you just realize working for a company 40 years, you're like, so I had to figure out a different path. Do I go back to school again and finish about another semester for a certain degree, another degree? Or do I go and get more certifications? Do I go drive a truck? Do I go into the finance industry? Because I was already doing financial logistics stuff back at the time. It just wasn't getting me. It wasn't moving me. I was there for a lot more stability reasons. Underpaid, undervalued is a huge understatement. But people ask, why me? Well, aside from being able to get you the maximum terms, rates, flexibility, and all of these things, I've been in your shoes and I value loyalty, trustworthy very heavily. And being somebody who's funded his own businesses in multiple ways, personal business credit cards, other types of loans, government funding, I've been there before. And I know how treacherous it can be in the holdup and when they respond back to you and when people are diligent about things. So here's my next segment to that. Your expectations from someone, I need an answer right away. Okay. So when you're working with a trusted broker like myself, my day-to-day activities, I have them on my calendar, whether it's on my notepad here or it's on my laptop. It's usually on both. And all I ask for is reciprocation. And I don't ask for much. What I want from you, and I ask this of you, please, is just be very open, allow for feedback, be patient, patience, feedback, be open-minded. And there's a lot of things in this industry that won't go right for you and me. Very serious. Right now in the morning, it's 10:42 Pacific Standard Time. I spoke with some lenders earlier about certain files, and some of them did not go through. I found out certain people were transferring money from a personal account to a business. And these are things that are common sense, or these are things that I bring up, but a lot of the times they're not said or they're overlooked by someone or people. It's not always one person, but multiple. Or, hey, well, I had asked this person if they were already working with this institution. They weren't clear about it. So now I'm figuring out in underwriting, or I'm figuring this out now. Like it didn't have to happen at that. It had to happen over here. And so it's a lot of this. And I can understand, because as a business owner, when I first was in business, I was doing everything. I was wearing all the hats. You probably are that person right now. And I'm not bashing or anything like that. What I'm saying is keep up the hard work. Keep doing what you need to do. If you're working 40 to 72 hours a week, whatever that looks like for you, and you feel that that's what's going to get you forward, then you keep doing it. And I've been there. I was working my butt off. I was waking up at 3 a.m, doing things in my businesses that were wow. And I'm fortunate now to be on this end of things, looking at it back and going, yeah, it was well worth it. But what would I do to change things? How would I use more leverage? So when you're looking at it from a broker's point of view, I'm going to be here by your side. The thing is, when a lot of people, they come to me and they go, yeah, I want financing. And what you may not understand are what the prime rates are. Like, people come to me and they go, and this is not me being bashful. Again, this is educational as well for you guys to understand that, hey, I want 6% interest rates. I want nothing more than 9 to 12% interest. And I go, they're getting those numbers from what happened in the past. And it's okay. Let me educate them and let me let them know if they know anything about prime rates. So prime rates right now is the sub base. So you're looking at about a 7.75% interest rate. Sorry, got a text from family. 7.75%. That can go up at the end of next month, about 8% now, or more or less. But 7.75% is where we stand with prime rates, plus an additional amount. So think about bank rates, 7.75%. I know there's other kind of things like real estate we looked at. It could be less, 504, etc. But 7.75 plus an additional 2 or so points on top of that. You come to the private lender route, the private investor routes, you're looking at prime rates plus anywhere between that plus 2 to 8 or so percent. So you're getting into the early teens, 15, if not high as 18% with certain ones. Now, how do you get over 18%? Well, if you don't have what we've been talking about, the credit. So if you've already racked up enough inquiries, you're like, well, obviously I can't do that because I've tried to explore getting these personal loans or credit cards and they won't work because I have too many inquiries, or I have late payments, I have timeshares, I have derogatories, I have things that need to get disputed, or things that just need to play itself out, bankruptcies in these last 5 or 7 years, and you can't get them because of these reasons. And so that's why a lot of individuals, they either look there or they don't look there. And then when they come back here and they say, well, I can get in with lower credit, great. They're not going to look extensively at my credit, which is the cash flow, the revenue-based part of this equation is saying, okay, well, I don't have good credit. Oh, I have a 750 credit, but they won't approve me for this. So I think I can get more here. Now you're leveraging your revenue, your cash flow. You're leveraging your bank statements. If we need to look at your tax return or tax returns and more, we'll ask for it if you're asking for a certain amount of funding. But the thing is, you have to meet me halfway, per se, and not close your mind and say, well, I was expecting to get, what are you talking about? I'm not going to get 6-month terms. What are you talking about? 8-month terms? Well, your credit is fair. You have bad credit. Okay, your credit is excellent. Yeah, but your revenue isn't. Is it? Your time in business, is it? So when we look at more than just those three things on your fundability, we have to come back and say, well, your revenue, you're not doing over 15,000 a month. On your lowest month, you're not doing over 20 to 25,000 like these lenders do. And sometimes they change things. That's why you have to be in the know. And the thing is, well, like, you have to understand that I want 100,000, but you're not even going to get 20,000. You have the credit profile where we can leverage your tax returns, at least 2 years of tax returns, and we can leverage some more if we needed to ask for business tax returns for certain credit cards at that point. If we needed to look extensively into that, unless it's a no doc program where you have a 680 or 700 above on all three consumer credit bureaus. No. So then, okay, somebody who has a 580 FICO with 35,000 a month looking for 50,000 has 5 years in business. Well, it's a little bit more doable. It could be. Now we have to see what else they have. Do you see where I'm going with this? So you have to meet me somewhere where it's not credit based, but it is revenue. Or if it's not revenue, it's credit based. Well, what do you have? If you don't have those two, or you do you have collateral? Do you have sufficient collateral? So if you have this wrong connotation or context at the moment, it's not entirely your fault. But if you've been watching me for some time and you know the material is there, yet you decide to do things your way and only your way, well, it's fine. Go find other inquiries, and that's okay. Hey, if that's what you decide, I'm a very loyal person. So whoever I find, if I find someone that I go, I trust that person with my financials, I trust that person, they know a bit about me at least, I'm not going to turn to someone else. They've proven to me time and time again that they've been very helpful. That's called loyalty. And so here's another perspective, and I'll go into the whiteboard. I know we said 15 minutes. We're going to try to close up quickly. So when you're not looking at it from my point of view, what I do day to day is I have my calendars. I go through my first things in the morning, which I drink some water. I will then brush my teeth, do my thing in the bathroom, right? And then I will go ahead and start doing some breathing techniques. I'll stand there, I'll breathe, I'll thank him above and her and everybody. And I'll say hi to the people that are no longer with us, my family, friends, and people out there, and thank them for giving me another day to be here. And then I go into some quick breathing exercises again, and I'll say about 3 things that I'm grateful for. And then what I'll do is I'll do some stretching. I'll get on the ground. I'll do a bit of yoga, like little movements here and there. And then I'll get into some push-ups. I'll do my push-ups for the day. And then I'll do some meditation. Right after my push-ups, I stimulate my brain. I'm right into doing some meditation. I sit there for as long as I need to, calibrating my mind, thinking, hoping that this day goes well. And I hope I don't get people who are going to be obtrusive and very hard to work with. So please don't be that person. Again, I'm an introvert, and as much as I know this industry very, very well, I'm not one to take advantage of. People don't do that, but people who try to, out the door. And so what I want you to know about that is that I'm a very caring person. So once I'm done there, I'll go ahead and probably exercise. If it's my day to exercise, today is a Thursday, I'll do leg days in the afternoon once I'm done with my work. Yesterday, I did my cardio. Anyways, you're like, why do I care? Because if you don't care about someone, what does it matter if you try to go get business funding? So see, well, you're not looking at it as, well, who is that person? Why that person? And if you're kind of just going over all of that and saying, I just wanted money, Michael, that's not a really good way to look at things. Because overall, you're getting a relationship. And as much as it is hard for me to open up, that's not easy. Like, just meet me somewhere. Like, it's hard for me to bring up something to someone and open up. It's hard for me. Very, very hard. But just somewhere. And I've had people who just don't see it from my perspective and go, well, what does it matter? And so they're just trying to apply anywhere and everywhere when I go, hey, we're going to find you the best one without hurting your credit. And I have an in-house of the best lenders for your specific industry. and we're not going to just hurt your credit by pulling it and doing all of that. But if we go to a direct lender, can that work better or not? A lot of the times right now in this market, it doesn't. And you have to go through an in-house brokerage look at where I have those direct lender partnerships. So what I ask from you before I move into this whiteboard very quickly is just put yourself in my shoes. If you submitted my questionnaire, like I normally have down below in the description, if I haven't said this, a questionnaire form to get in touch with me, that's primarily number one, what you want to do. And I would say no questions asked, because I don't want people just calling and having to do inbound calls, only because I do get flooded, one, and then two, it wouldn't be as productive doing this. And I would have to filter out, and I don't want to have to prefer someone over the other just because of revenue or certain things. So I want to give you a fair and equal chance of submitting that questionnaire form. And if it takes after that, once I submit it back to you, I give you your best funding option and options thoroughly broken down. And it makes sense to, for clarity reasons or for something very simple. Hey, Michael, just 1 minute. I saw the option number one. You said that was the best one. Like right now, I have multiple people who literally I've not had to get on a call with. And it's not because it's not what I shouldn't be doing. It's just there's ways that I've put processes, systems, and automation in place. And as an entrepreneur business owner who you're getting this from, and I've tested this and what works. So you'll get a questionnaire email response back from me on your best funding option and options broken down. And I may say one or two options at the top are the best ones. Here's the differences between the two. That might show you the SBA. I might then show you a credit-based program if that doesn't work. But you're like, the credit-based program wouldn't give me as much, but this one will. Let's start an SBA. So I have plenty of people who are like, let's just get started. Multimillionaires, 6 figures. You have the 5 figures, the 4 figures, 3 figures, 3, 2, 1, 0, literally, who get started that way, who I've never even had a phone call with. And it's also paramount. Why? Because I see a lot of information seekers. I've spoken to this with other brokers. I've spoken to this with other agents, and they would tell you the same thing. Maybe less, more or less. And I do a lot of high volume. And the thing is, when I give somebody my time, I'm very protective of my energy and time. I better never have it wasted. And the thing is, sometimes it makes sense to push that conversation to an extra 5 more minutes or so. And it also is blended in with the relationship that I may have had multiple contacts with that individual. And I say, hey, you can give me a text or give me a call. Even on my personal time, I've picked up calls or I've answered back to a text message after my work has been done, an email, etc. But it won't be always. It's just put yourself in my shoes. People who are like, I want money, they appear to be that they want money, and then they just disappear. It's like they needed money by today. They needed money by tomorrow, and we were being respectful. He was being, or she was being, somebody who was allowing feedback, and then they just disappeared. I have literally people in my inbox who go, I needed $150,000 for equipment, or I needed $700,000 for this. I need to build a gas station. I need to do, yeah. And I've been responsive to the individual for the majority of them. And then I go, where are they? Well, I get bombarded with emails. You think a conversation over the phone is going to make it any better? It may, but what is going to happen as a result? Probably nothing, maybe something, but I just gave that person time over a phone call. See, I'm not just going to be that information guy. I'm not just going to be that anymore. Before, I used to just say, hey, I'll give you as much information as you need. And if it doesn't go anywhere, at least you got it. And that's my expectation. It's not like I expect a result out of it, but it's come so far now where I have to protect that energy and time and say, will this even develop into anything? At least something. Will it even become an application? Let alone would it even be able to go through and be able to go through the next steps depending on that underwriting? See what I'm saying? So it isn't no longer where I'm just going to, everybody wants a phone call. You guys can see my TikToks, my Facebook Reels. All of it has been blown up, and I appreciate you guys if you've been a part of that journey with me. Greatly, I do appreciate you guys. I really do. And I never thought in a million years video would be something that I'd be involved with. Ever. See, I'm a behind the scenes kind of guy, but this is what I have to do. And so here's one more driving point before I get into the share screen. What I see, and I had a meeting today with my team, and I didn't bring it up. They did. I just added and contributed. But what I see from business owners, I know you're all over if you're wearing multiple hats, but when it comes time to getting into an application, do you have the documents already ready? How many of you can answer me that? Do you have at least 2/3, 1/3 of it. Now, it depends on the type of service. So we can go into a no doc. It could be a low doc, medium to high doc. But do you have at least one of it, 2/3 or 3/3, or however much we need to go through? See, what I wouldn't want is when somebody goes into an application is then, well, now we're awaiting their 3 months of bank statements. Now we have 2 accounts we got to get accounts from and statements from, and then now we don't even have their voided check. And then now I got to go and reach out to somebody who knew of this already. And I'm not chasing anybody. I'm just reminding you, hey, and there's people who disappear where I go ahead and show them an offer, and it's like they couldn't even answer a phone call. I didn't have to go to that extent. They probably don't want a phone call. I don't want to give them a phone call. If I'm that kind of person. If we don't have to get on a phone call to do something, and I understand the conversions and all those numbers things, but there are times where it's like, well, this she already knows. He already knows what he or she wants. Let's get started. That's it. They have it. Or sometimes I have to say it over a call and say, hey, this was the offer that was presented. This is from my lender. He gave you 4 options, and here I'll break them down. And I will never pressure you. I'm never going to do that. There are people who come off to be very, very nice, and then they tell you something different. I'm not like that. So just put yourself in my shoes. I know you have everything you got to be doing sometimes in your business, but if we're playing this waiting game right now, phone call. If we're playing this waiting game too long, I mean, it can happen. It's okay. It's an entrance point. It's not like you can't submit something once you're in, but it's like 1, 2 weeks, 3 weeks, and even worse, you weren't even responding to any of my emails. Ugh. Like, who wants to deal with the person like that? Nobody does. And so what it comes back to ultimately is character and reputation. And character is the fundamental flaws you or maybe somebody else is dealing with. I worked on my personal development for a long time. So that's also a translation into my businesses. And it shows not only in my revenue, but it shows in my day-to-day operations. This right here, when people ask me, what is my greatest asset? What is my greatest attribute? My mindset. My compartmentalization, my mindset. So even if something goes backwards, this is too strong. Really. I don't know if you could say that about yourself, but this is way too strong. No matter how hard of a challenge, because I've been through them, I've only been through them through experience as well, is how you're going to realize these. This grows, but you got to work on the character side. And it could be a blend of what's happening on your personal life that has and also a repercussion on what happens in your business. So you got to sort those things out as well. And this is coming from tough love. This is coming from experience. This isn't coming from aggression. And so forth. So now let me jump into the whiteboard here. But again, look at it from my point of view. As much as I look at it from yours, and I love working with you guys, just making sure that you guys are on top of things. Just you don't have to be as punctual or disciplined, but just show up and do it correctly. So let me move this over first. Here, I'll bring up the screen, the little screen at the bottom. So just to close up this, let me bring this illustration. Perhaps you know where I'm going with this. I probably can't see that because of the ring on the HP computer. But here, you see that this is, we're going to put the F here for foundation, not for fail, not for achieving, overachieving, or anything like that. But down here is where a lot of people begin, and they don't really realize it. And then up here is probably your UO, which I would abbreviate for ultimate outcome. And I like to leave that as a multiplier, which you're about to see right now. So look at this. There it is. Okay. And so down below, I'm used to saying down below in the description. So right here, it says F for foundation. Now, what do you guys think it means? I know not a lot of people might be on here at this time. We have things we're doing in our businesses. Hey, I'm taking time out of my busy schedule to do this for you guys, if that says anything. And you're like, well, this guy has all the time in the world just to do whatever. No, I got multiple businesses I run. I don't know if you guys heard me say that earlier, if you're just joining me now. But I have things to do. Once I'm done here, it's still 11. I got to get on LinkedIn and do a few things. I got to get caught up on a few other activities with some lenders. So yes. So here, foundation, what is it? That's the personal PC, not for a computer, but for personal credit. So if you don't have the right optimized credit profile, yet you're trying to get over here to your ultimate goal, which your ultimate goal for a lot of people are what? SBA loans. That person knows better not to call like that. I'm just getting a phone call. So SBA loan here. So that is your ultimate goal, is to get an SBA loan, right? For a majority of you going, well, I got an EIDL loan or the PPP loan or there's this one. I'm not going to get into the exact parameters of each and every one of these service guys. I'm just going to touch upon them briefly on what your ultimate goal is, but where you could be lacking in all of this. So SBA 7A, 504 loans, those are the ultimate ones that people want. And I'm getting a lot of people through those. But what most people don't, and they underestimate this. Let me move this over. We'll try to go, oh, it's already 30 minutes. So we'll try to close up shop here. I apologize, guys. But I want to get through this. What most people underestimate are the SBA loans, on how much documentation they actually need to supply. So there's an introductory amount of documentation. We might ask for about 5 to 10 or 5 to 15 amounts after an introductory amount. And we review with my team, my internal team. We all look at it. And then the next time around, we can develop a term sheet or an approval term sheet, send it out. And then after that, we can get a quick turnaround with certain documentation that we'll need from that. And then we can move over to the next step. We can go into then final underwriting. And then from there, we can close up shop. So a lot of people, they underestimate how much exact documentation they need to provide. So if you're trying to get an SBA loan, I'm telling you this right now, I'm going to give you everything you need. And if you can't even give me the initial amount I'm going to give you 1 to 5 days. Maybe you still need to get it from a CPA. I'll give you 2 weeks at most. But we're not going to put a hold up on our team. I'm going to say, do not wait. I put in these emails, do not waste my energy and time. If you're ready to, do it. If you're not, gather your documents first, if need be, because this is what we'll need. So it's better to have it all ready and prepared. So by the time you submit and it's going through processing, and I have to go speak to the lender. That's what I'm doing on my back end. You guys don't see this? I've told people that recently. I'm speaking to my lenders and my team. And we're communicating. Who is this client, Michael? What are they looking for? I know they submitted this. Do you have any documentation? And I go, okay, now we sit down and review. These are the scenarios. So what you have to understand is there are higher documentation services. And if you don't meet those and you're taking so much time, you're taking your own time and you're like, I'm brushing my teeth at this time. This should have been sent in yesterday. You even said you would have sent it in within the next day. Like, I'm not going to baby anybody, and that's what I shouldn't be doing. And it is kind of outrageous because we get busy. I get it. We get busy. We get flooded. We change our minds. It's like, but how am I supposed to assume? I'm not assuming anything. Just because you went cold doesn't mean you don't want something. Does it mean only that? No. It can mean anything. So over here, SBA 7, 504 loans, 7A loans are at the top. Down here are the foundational elements, which is your personal credit. And what you have to work on are, like I said in the beginning of this video, getting an optimized credit profile. If you do not have an optimized credit profile, you can forget, a lot of the times you can forget about the credit-based financing. So if you don't have enough credit history, enough juice there, then you're going to have to fall back on something else. Can you even get business credit cards? So we look at business credit cards as well. Can we do that are unsecured? Nothing with collateral on these two unless we needed to. And so over here, we look at business credit cards, unsecured financing, business financing. Can we do that? Is it plausible? Or, hey, how about we go the business credit establishing route with vendor credit? We can work on vendor credit initially while we're working on cleaning up your credit. You clean up your credit, then you're having a more optimized score to get business credit cards, but not just any business credit cards, 0%, and then multiple, and then how you're doing it correctly. And so that's going to your advantage. So now let me move this over. Okay. So what is happening is you're building up your personal credit profile as well as your business credit. And then the next step of the equation, we may be able to look at a revenue-based. So R to B. And this is actually really cool because if you get into a revenue-based program, you can also use like payday loans to pay off any existing balances on credit cards, anything else you need, debt relief. Maybe you need to consolidate, refinance. There's a scenario there. So we look at getting you a quick injection of a short-term payday loan that you can just pay off as quick as possible to bring down your expenses and give you more relief, put more cash flow back into your business. And not necessarily do you have to stick with this same product all the time unless you have this here. So, or unless you don't have any of this. Like if you don't have the personal credit and the business credit, you're going to continuously go down this vicious cycle of saying, well, why do I keep getting short-term loans? Why do I keep getting these cash advances from 3 to 24, 4 to 24, 3 to 6 months, 3 to 11 months? and I can't get over 24 months. Well, because you haven't built the foundation, and you may already have an in right here with this lender or multiple, and you're growing and expanding, your revenue is getting even better. So now we can get you more funding that's short-term and even or long-term in some cases. But over here with the personal loan and stuff, you're getting 3, 5, 7 years, 1 to 5 years with the loan. Lines of credit, credit cards, less than that. But still, it's at your disposal. So revenue base, we're looking at your bank statements right here. We may need to ask for a tax return if need be. And then over here, what is the next step? Collateral. See how we're moving up the lateral? The lateral. It's a football game. The bottom of it here is the personal credit, the business credit, established, working on that. And you can work on these at different levels, just in case you know. If where you are at this point in your process as your business, you go ahead and say, well, I'm over here. I have the revenue. I'm generating 6 figures, 7 figures a month. And you go, well, okay, I just don't have good credit. Well, what do you think you're going to fall back on? This? Probably not. You're already probably engulfed in a lot of credit cards. It might not even be business credit cards. So we have to look at maybe paying off some cards with this money you're using, but the rest of it is going to be used for fueling growth and expansion or other purposes. Okay, that's not a bad thing. So you got to look at the benefit exceeding your repayment. So what if you got a higher interest rate? Why would you get a higher interest rate or factor rate? Because you don't have this and you're worried. And you're worried because you can't get approved for anything over here, or it's not enough. What you're getting over here is not enough of an approval. So you got to use it in conjunction with this. Now, what is the next level up? Collateral. Okay. So with collateral, let me move this over. Speaks for itself. Asset-based financing. Account receivables, unpaid invoices. You can use an invoice factoring company. Account receivables can mean a multiple amount of things. You have real estate. A lot of the times, high commercial real estate, we can look at other things like residential, but more high value commercial real estate. We're looking at, and there's rentals in that equation, some other parts. We're looking at inventory. We are looking at high machinery equipment for equipment sides, usually not like trucks. It's harder to, especially in trucking. SBA may be able to work more. You have commercial real estate. You have and or developable land. So now let me move this back. So you have developable land, inventory, account receivable, stocks and bonds, mutual funds. Oh, over here, if I didn't say this already, you can use 401k IRA financing. You have the home equity lines of credit, the home equity loans. You have cash out refinance if you need to, especially over here at the collateral. But that's what you have there. And what's the next level up? The SBA. I know it looks a lot clunky here, but this is how it would look like on a sketch pad. Anyways, so SBA, how did you get here? Well, because you have an optimized credit profile, you have the business credit, you have the cash flow, the revenue, and the bank statements can speak for themselves as well. You probably have the collateral, but not always will the SBA loan lender look for collateral. Not usually it's cash flow first, liquidity, and then collateral, etc. So if they're looking at that and you go, well, over here on this part of the equation, and here's a pro tip. Let me move this over. I know we're at 40 minutes. Close up here in a second. Here's a quick pro tip. If you have what you need for an SBA loan, usually it's the all three, credit, cash flow, collateral, then, and you have to look at what you're doing month to month. So if you have a depositing frequency that is very stable, you're saying, hey, I'm a restaurant business. I deposit 5 times a day or whatever many times. This is how much I'm earning per week on my deposits. This is what's going in and this is what's going out. And I can see all these things. And so I go, okay, well, they have a consistent frequency of depositing. They have over 7 deposits in this week. So it looks like they're doing it day by day, or they're doing this amount per week. So, okay, they have a very steady flow per week of deposits, and they're generating about 100 or 400,000 a month, whatever it is, even if it's just 50 or 60,000. And are they doing it consistently? Is it not like 60,000 one month and then it's like 20,000 another? Now they did in the deposit, things went out of their control. So for in a situation like that, you have to look kind of like an SBA 7A loan if you qualify. If you don't, and if you're just using it for working capital, it becomes way more expensive. When I mean way more expensive. And, you know, putting your home on as a lien, as a position, even if it's a secondary position, they're going to want to look at that. And sometimes they may ask for more. And certain banks ask for more, like on top of a home, real estate, other lenders. That's why you go this route with me. They won't always ask for all that. So you have to understand who you are going to. And so just keep in mind that if you don't have frequency of depositing, and it's kind of like this, like construction companies, trucking, like right now, trucking, you know who you are if you're watching this and you're in trucking, even if you're not. And there are other businesses where, hey, you're depositing frequency, or there's another business that only deposits biweekly or towards the end of the month, 2 payments. That's not good to a revenue-based lender, but it may look more attracting to an SBA loan lender if they're willing to work with you, because cash flow ideally is what they're looking at. And if that surfaces up and they go, okay, here's your net operating income at the end of it all. Is that enough for us? Does your debt to income look enough? Does your debt service coverage ratio, does your EBITDA, does your interest, does all this look good? And to us, what we're looking at, okay, we are able to work with you, and we could spread that out over 10 years, if not 25 years with real estate, with the right real estate. So then your payment terms are not taking a downturn. You're going upwards instead, because you're able to take a longer payment, and it's keeping more money into your account than what is going out over the shorter term. But just because you are infrequently depositing doesn't mean the SBA is going to always work, or it doesn't mean it's the only option. So I think this is where I want to leave this video at. You guys got to see kind of the different levels. You guys got to see the perspective from this guy, this introvert, this person that means no harm, but don't make my life hard, please. Just make it frictionless as resistance. Let's do this as simple as possible. I have people to this day, and I get it, it's business and finances, but if I knew somebody who was doing it the way that I was doing it, and they're very punctual and disciplined and know their stuff, they actually have other businesses that they run, they know what they're doing, I would have gone with what they were doing. You have to sometimes conform to what I do in this world and me meeting you 50-50. In this world, in my processes, you have to meet me a lot of the times 70-30, 80-20, if not 90-10, if not 100%. And that's okay. There's nothing wrong with that. Like right now, I have people just trying to call me out of the blue. Like, I'm not going to pick up a call like that unless I very much know what it is about and that it needs to be. Okay, everybody. I think that's where I want to conclude. Oh, I didn't say this. Up to $26,000 per employee in a refundable payroll tax credit. I'll leave more information under that down below. I won't go all into it right now. That video or that page will describe everything. I've already made content on it. But that's what you should get. Right now, it's been more harder than ever. And I've been seeing it as a broker myself, where I go, I know why there's been a drop-off right now in this market. Things haven't ramped up. But when things don't ramp up, that's also when you should be the most prepared. You should be saying, hey, in March, this will be what happens in June. But right now is when you should be allocating. Right now is when you should probably be trying to get a line of credit, if that's what you're trying to prepare for. And if you can't get a line of credit because it's much harder to, very hard right now, then there's the lump sum, or there's the personal line of credit to fall back on. There's the business line of credit. How about a startup loan? So what we're not leading in with is having an optimized personal and business credit profile. And this is why I get a lot of people, well, I'm not bashing on anybody, but I get a lot of people doing this. I get a lot of people who are bad mouth. And I'm like, whoa, I could just drop this industry like that because of things like that. It's not about the money. And I'm starting to see the differences. I see the differences within having a digital marketing agency business, affiliate marketing business, passive income, and what it takes to actually do it in this industry, how I've been doing it for this long, because I have this. And I really believe in helping people. But when people make my life hard and it's just so confusing, and it's like, where were they a second ago? And like, they said they were interested in something. Why did they even take the time to fill out my form if they knew how this was going to work? So you guys are battling, like, I need money. I get it. You're frustrated. You're just, I need it. I need it now. If I don't get it, this guy's just speaking a lot of crap. Instead of saying that this guy's speaking a lot of crap, which I'm not, how about we work on ourselves? We say, hey, I got to work on this better because I'm not seeing something he is. And I've been in your shoes. If you're in that position now, it's not like a bad thing. It's just, you got to work on yourself sometimes internally to see the things externally that you weren't seeing before. I don't want to make a comment to this or bring it up, but I had a person on TikTok on a live the other day who they were upset because the Black-owned businesses, African-American-owned businesses, and I'm not saying anything wrong. That's not what I'm getting. That's not what I don't like getting into things like that. I don't ever. But I'm bringing this up because what they were saying wasn't exactly correct. I'm like, They're like, don't say it because you're not a black-owned business until you're a. I'm like, I'm making an observation based on the experiences I've seen. It doesn't come down to always an ethnicity thing. Now, if it's a grant or if it's a certain type of a program, maybe there's some more leeway, perhaps. But does it encompass everything? No. I'm not saying I prefer like my own ethnicity. I'm Hispanic, Mexican, Salvadorian American. Grew up in Orange County. They should know to send me an email. They're trying to contact me over and over. And so, or a text. What I'm saying is I don't even give them leeway. Just because we're of the same background doesn't mean I'm going to give somebody even a better look than I say I'm going to give this person a better look, or the lenders will. That's outrageous. That is outrageous. And whatever history we hold on to, I get it. We come from this background and we had to fight for this. I got it. Okay, great. Yes, but let's not blend that in when it comes to certain types of finances. Let's leave that out. I don't talk about those. You don't hear me talking about my Hispanics and my we were what was the word? I just had it right now too. Privileged. And so I'm like, somebody brought it up the other day and I go, what do you have? That's enough privilege. So you're saying you don't have privilege? You got enough privilege. You have privilege to go to school? You got the privilege to do this? There's privilege. Now, it depends on how much, I get it. But I'm like, we got to be resourceful. Instead of asking ourselves, this person is this and this, we got to be resourceful. And if we're not like doing that, so I know some people in here might watch this later and go, well, they're going to try to make their point. And I go, well, okay, make it, but I'm not going to get into these things. And there's somebody who commented on a YouTube video. And I'm like, I knew that's not stuff that I get into, but I just wanted to address it and say, well, this isn't about it. It's more than just that. And I care about everybody. I'm not saying one person, I'm going to say this person is better and I'm going to look at them better than the other person and all that. So that's everything from me. We spent a good amount of time. I said under 15 minutes, 47 minutes. I appreciate you guys. Thank you for tuning in as always. I'm very grateful. If you guys get to see something like this from me, like where I'm giving you guys tough love, people are like, why are you presenting yourself? Well, if you guys didn't hear it like this sometimes, would you guys ever take any kind of an action, or would you guys ever change about it? Probably not. You would continue just trying to take advantage and finding organizations and things don't work in your interest. You don't find that exact relationship with someone who can go to battle for you and knows everything out there that's going to work and not. So I got to look at it on my part too if I'm wasting my energy and time, and I can like that figure it out very quickly. And that's a very huge skill set that I have. And so that'll be everything down below in the description. Make sure to get started. Appreciate you guys. Thank you for tuning in. Have a great rest of your Thursday and evening as well. Enjoy tomorrow as it's going to be Friday, and then the weekend. If you guys don't hear back from me, keep looking out for my content. Get started with the questionnaire form down below. And like always, I will talk to you on the next one. Oh, if you like the video, please give it a thumbs up. Share it with others who you feel will find value out of it. And if you haven't subscribed, please go ahead and subscribe and click that bell notification icon so you do not miss any future content I will be coming out with. That is it for now. Talk soon. Bye.